Hi, everyone. This is Tim Melvin of the Deep Value Report and the Banking on Profits newsletter service, coming to you once again from down here what is just an absolutely gorgeous day in Central Florida. Like everybody else, we're seeing temperatures drop a little bit. We're now down into the mid 80s instead of the low to mid 90s as we were all the way up pretty much through the end of September. So fall is pretty much settling in and the weather is just beautiful. We're just weeks away from one of my favorite times of year, and that's when those first cold snaps hit Chicago and New York and Detroit, and I can start sending the local weather forecast to all my friends in those cities. It's just a delightful activity, and I love doing it every winter when everybody else is freezing. Of course, it also increases our house guest request list as winter goes on in the Northeast, but we're always happy to see folks. So anyway, this week, fantastic move in oil prices. It's been almost comical to pull a portfolio of deep value and international deep value up every day and see these 8, 9, 10, and even 15% daily moves in some of our energy stocks. Now, that's exciting, but we're pretty beat up on those things, so we got a little ways to go. Now, rig counts were down. That's helped drive some of the temporary, but I think it'll be a temporary rebound in oil prices, up about 10%. Faded a little bit this morning when we noticed that inventories had built once again in the month as supply and demand still, they're not equaling out just yet. So crude inventories are building in the United States. It's nice to see the pop in oil. Immediately, people are back out with $50 and $60, short-term price targets for oil. I think the Saudis are much more committed to their market share strategy than most folks believe. And I don't think that the global economy is quite yet strong enough to spur the type of demand that will create a permanent higher price for oil. Now, look, that's just my opinion. I actually hope I'm wrong. We have a lot of energy stocks and energy and commodity related companies in the portfolio. I'd love to see it shoot back up to 70 and take the stock prices up with it, but we'll just have to wait and see how things play out. We love the energy stocks that we have. We have a very long view, as I say over and over, much more worried about the price in 2020 than I am where it closes today. And I'm highly confident that number will be a lot higher than the current stock quotes today. Not buying much else in the space because although we can find some cheap stocks, they're not necessarily safe. The financials metrics do not hold up to a rigid examination, so we're not real excited about adding to any of those with shaky financials. So for now, we're not buying in the energy patch. We're certainly not selling anything based on the relatively short-term move over the last week. We like what we have. We're standing pat in energy. One of the biggest news since the last video last week was, of course, that horrific jobs report and back-month downward revisions in the past two employment reports. The only thing I can say is, once again, I'm surprised anybody's surprised. Now, I know the economists, they're locked up in their office. They've got their charts and their models, and they're telling us that, things aren't that bad. It's getting better. We're getting ready to hit a growth spurt, and the jobs market's doing wonderful. I don't see it. I walk around, I talk to people. There's still a lot of folks working two jobs. I know that when I talk to the millennials, my son and daughter's age, they all have a feeling of job insecurity, even those with very good jobs. Lots of them are still working two jobs, and of the recent college graduates, most of the kids that I talk to are working outside their major. In highly skilled areas, there is some demand for workers. I keep telling everybody, if you have kids, you need to get them in to some type of informational technology education, because that's going to be the new, and it's already happening, that's the new middle class, and that's permanent. It's not going away. Manufacturing will continue to become computerized. Technology will improve productivity while removing the need for actual human beings. So, yeah, I think IT is probably going to create and maintain the new middle class here in the United States. But overall, that job picture is not that great. With a little bit of traveling that I do, going up to Atlanta last week, I think we're going up here to Philadelphia in a few weeks for a conference. But when I'm talking to people and I'm looking around, once you get outside the major downtown central business districts, there's not a lot going on. Not in new home construction in most parts of the country. It's kind of robust here in Orlando. But once I get outside of Orlando, I don't see a lot of activity. Certainly not a lot of commercial real estate new build activity once you get outside the major cities of the United States. So, it just overall, we're still in that, hey, it's better than it was in 2009, 2010, but this is not a great economy. We're not creating a lot of meaningful, permanent jobs. And until that happens, we're just not going to have robust GDP growth. So combining that with the stock market trading at 20 times earnings and having a hard time finding bargains, yeah, we remain cautious and heavily in cash in the deep value portfolios. Now, there's another area outside of small banks where I'm finding some value. And this really was spurred an article on seekingalpha.com where a fellow quoted the Green Street Advisors, one of the best REIT research firms in the country, in my opinion. They've heavily based their work on net asset value, which I think is absolutely the right approach. Well, they came out and said in a research report that REITs were very undervalued. That in fact, that if you had to buy the portfolios in the properties, well, the REIT values were trading at about 15% less than that, and they felt that could spur some M&A activity as real estate alternative asset funds and private equity funds took a look at that and said, hey, we can go in here, buy this stuff on the cheap, sell the buildings that we don't want, and just add the premier parts of this particular REIT's collection of properties to our portfolio and enjoy the narrowing of that discount over time. That's a valid point. That very well could happen. Now, when I put that together with what Sam Zell has been saying, and of course, Zell is one of the greatest real estate investors in history, has made himself a billionaire buying real estate at bargain levels, selling it a few years later at much more inflated value, shall we say. He's just basically said, look, big is the way you have to go in the REIT game, that these small REITs with what he called less than $2 billion worth of stuff, they're not going to have the scale to compete with the larger REITs. They're also not going to have the access to the capital markets that the larger REITs enjoy on very favorable terms right now. So it's going to be very difficult for them to compete and grow their business over time at a pace that satisfies investors. I think that they're right. And I spent a lot of time with a screener over the past few days just digging down into the smaller REITs. Hey, there's lots of them, okay? And they're in every range of the real estate business. One of the more fascinating ones I ran across actually makes church mortgages. It's been one of the most stable securities of the last decade, just sitting there cranking out regular dividends over time. It's very small, by the way. It's only about a $5 million market cap, so we're certainly not going to throw the name out there. But whatever you want. There's campus housing REITs, there's hotels, there's commercial office buildings, there's industrial space, there's single family homes, all segments of the real estate market that might have an interest in investing in. There's also a lot of special situations down here among these. Less than $2 billion in market cap is kind of where I cut my initial screen off. But the fascinating stuff that I found was really down under 200 million, where there's just some nice collections of properties trading at huge discounts to the net asset value of the stuff that they own. So going to be doing a lot more work with this. Got to do a lot more digging, but I've always loved REITs. I think next to banks and insurance companies, they've been one of the more profitable sectors for me over my career. So we're going to go down and see what bargains we could find that are worth adding to the portfolio now. I've got a couple of strong candidates. And I will say that if we get a broad-based, meaningful market pullback that lasts for more than an hour and a half, that sector of the market is going to be an absolute gold mine. So a ton of really quality, profitable, dividend-paying REITs trading between, say, 90 and 120% of book value. If they were to fall down into that 80% of book range, they would just be absolute wealth-making opportunities that we haven't seen since 2009, basically. So keeping a real tight eye on the small REIT space, because I think there's some stuff to do, and I do believe there will be a lot of M&A in that area over the next several years. Now, we all know I love a good consolidation trend. We continue to be involved and will always be involved in the small bank space. And the last 2 weeks have been very kind to us with two mergers, pretty much one a week to get us started, one each Monday, both with gains of over 70% of small community banks being bought by larger community banks that are looking to grow their asset base to deal with regulatory and technology costs. We're looking for a great earnings season out of the small banks. I was at the FIG conference up in Atlanta last week, and everybody up there is pretty upbeat. They're seeing decent loan demand. Credit problems continue to reduce. Equity values are continuing to increase. So everybody's just very positive. They felt like it's going to be another strong quarter. For the first time, I really heard the smaller bankers talking about aggressively taking market share for the big guys, from the big guys, the BofAs, the Chases, the Wells Fargos. They're able to successfully compete against these guys. And one banker told me that the big banks and their customer service policies was actually his marketing department. So all in all, I think it's going to be a solid quarter. Going to buck the trend because it's going to be a down quarter overall for the S&P, maybe slightly positive ex energy, but not a fantastic earnings quarter. But the small banks, we should see decent earnings, dividend increases, new stock buybacks, all things designed to help push stock prices higher over time. If you're not involved in the small banks, you should be. We did just raise the price on our main guided portfolio product up to $1,000 a year. It's still a bargain at that price, but keep in mind you can still get the monthly edition. That's kind of a broader overview, and we'll talk about some individual banks that we think are worth further investigation. That's still only $99 a year, so you can get involved and just kind of build your exposure over time to the sector with our monthly newsletter product. I'll put a link in the little description file that you can click on if you want to check that out. Huge baseball week coming up, folks. I'm pretty excited about this. My wife a lot less so, I guess. But last night we watched the Astros, one of the most amazing turnaround stories in baseball, defeat the New York Yankees. Sorry, Yankees fan, but that Astro turnaround story and that young team is just an exciting topic. I'm looking for big things out of that. The Mets are back in the series. We've got the Cubs and the Pirates tonight. That's going to be just a fun baseball game to watch. I've got to pick the Cubs in this one because my son-in-law and daughter, of course, just moved to Chicago this past summer, and he's got season tickets for next year. So to stay on his good side, I'm picking the Cubs tonight and expect to see me on a regular basis every time I can get up there in Wrigley Field enjoying an old style next year as I pirate my daughter's tickets. So anyway, the Mets are in. The Cardinals are always a powerhouse. Toronto has a great baseball team. The Dodgers can make this interesting. Texas was hot to finish up the year. So there's a lot going on, a lot of potential great baseball ahead of us. Now, the safe pick here, folks, looking over the rosters and the matchups, the safe pick is Toronto and the St. Louis Cardinals. So that's not the one I'm going to make. What I'm going to do is I'm going to do what all the stock market guys do. I'm going to pick the most outlandish, improbable combination of teams to go to the World Series. If I'm wrong, everybody's going to forget about it. But if it's right, I'm going to market myself as the greatest baseball handicapper of all times and charge tens of thousands of dollars for my baseball game selections over the next year. Anyway, here we go. Whoever wins the Cubs-Pirates game tonight, and I'm going to pick the Chicago Cubs, is going to end up playing the Houston Astros in a wild card World Series with Cubs winning in 6 games. Now, keep in mind, I said the winner of the Cubs-Pirates game. So if the Cubs lose tonight, that becomes the Pirates-Astros with the Pirates in 6. So there's your pick for this year's World Series. Anyway, markets are going to do what they're going to do. We're in a great position with a lot of cash to react to what they actually do rather than sit here and try to predict what they might do. Our community banks are just chugging along. Merger and acquisition activity in the space remains at a solid pace. So we're seeing some deals. We're up to 7 this year. We expect several more by the end of the year. So we feel very well positioned as we go in to this final quarter of the year with both the deep value and the banking on profits portfolios. Pretty excited about it. Anyway, that's about all that's going on down here. I will talk to you guys next week and have a fantastic week.